and welcome to the Business Standard Morning Show. I'm Nazia Iqbal, and here's a look at the stories for the day.
This is GE Vernova, helping generate and move the energy that will change the world. Welcome to a new era of energy.
On the heels of Twitter, Facebook parent Meta platform too has announced massive job cuts. More than 11,000 employees are being asked to leave. Google, Microsoft, Amazon, and Apple have already hit the pause button on hiring. Fear of recession in the US is forcing tech giants to tread carefully. The Indian job market too is facing some heat, especially in the IT services. A report said that there was a 50% reduction in job openings in IT services when compared to last year. But recent CMIE data says that overall salaried jobs are on the rise. So, how does the IT piece fit in the larger job market puzzle? Let's find out.
It's official now. Meta CEO Mark Zuckerberg made the announcement on impending layoffs on Wednesday afternoon. About 13% staff of Meta, which owns Facebook, Instagram, and WhatsApp, are being told to leave the company. Their number is a staggering 11,000, and it is one of the biggest layoffs in the US this year. Zuckerberg has said sorry to all those who will be affected with this move. It comes just days after another charismatic businessman, Elon Musk, fired 3,700 employees soon after taking over Twitter. In India, over 90% of employees were given marching orders. Companies like Microsoft and Snapchat too have fired large chunks of their workforce. Intel is planning to begin soon, and Amazon and Apple have put a brake on hiring. The trend is clear. The recession clouds are looming, and tech giants are shedding extra flab. In India, IT companies have also reduced hiring at engineering campuses, with media reports suggesting up to 20% fewer hires in campus and entry-level placements in the next financial year. The IT sector's hire and fire situation is a worrisome addition to India's overall unemployment numbers, which are also on the rise. Headline labor market metrics deteriorated in October 2022, with the labor participation rate falling from 39.3% in September to 39%. Unemployment rate rose from a low of 6.4% to 7.8%. However, experts have pointed out that there's a hidden silver lining. Writing for Business Standard, the managing director and CEO of Center for Monitoring Indian Economy (CMIE), Mahesh Vyas, pointed out that despite witnessing a decline from 86 million in September to 84.7 million in October, salary jobs in both months were in fact higher than they were during any other month since the pandemic-related lockdowns that hit India in March 2020. The CMIE data for the last 2 months suggests that salary jobs are finally back to their pre-pandemic levels after a long gap of 32 months. Then how does the IT piece fit into the larger job market puzzle? D.D. Mishra, Senior Director Analyst at Gartner, tells us.
The correlation factor actually is more complex than we think, and at times it may have a direct dependency, at times it may have an inversely proportional relationship, because as automation and shift from labor to technology arbitrage increase, you will see that dependency on technology is more, and as such that the jobs in the tech sector will be more, and in other sector it will cannibalize a lot of employment over there.
In the IT sector, the caution in hiring is on account of 3 factors. Sumit Kumar, the Chief Business Officer at TeamLease, explains.
The cautious approach is on 3 accounts. One is on the the economic recession that's kind of knocking on the door, and why we see that UK has already announced that they are in the recession. US is kind of in the recession, so it's just an anticipation that it may hit us anytime sooner. Is the reason why the organizations are in the IT segment are taking a bit cautious approach. also for the fact that our dependency on the IT market, in the US market for the business is quite large. So, that's one of the reasons, which is the reason why there's a slowdown in the IT hiring. The second is also in terms of the hiring talent cost and the shrinking profitability or the margins, which the organizations are facing right now, and also because of the competitiveness in the industry as well. If you were to look at the manpower cost, it would anywhere be between 55 to 65% of the cost for these organizations is for the people, the talent cost. And that's kind of, also giving them an impact. So the idea right now is that how do we right-size the organization? In fact, most of the organizations that are also laying off is on account of productivity and the performance. That becomes the third reason why, the organizations are right-sizing. So, the job role which can be done for one particular job, which was being done by, let's say, 5 people, 6 people, we're saying that how it can be done by 2 or 3 people, primarily because of the profitability, which is getting impacted because of the market conditions. So I think all three of them are interlinked.
With most of the major multinational tech majors leading the layoffs and hiring freeze phenomena, markets experts believe that the current cautious approach to hiring in Indian market is necessary but temporary.
As per the Global Employment Outlook report, it very clearly says that in Q4, the hiring is expected to kind of pick up again. And amongst the 2 countries which have which has a higher projection, one is India and China. And India stands at almost about 54% of the projections of the organization said that yes, they would be hiring in Q4. So I would say that it is temporary. But having said it's temporary, it is required, because everybody has to ensure that how do they adjust to the current economic situations.
Mishra also believes that the impact of the impending recession will be muted on the Indian IT market and stresses the diversity of the sector as a factor in understanding the complexity of the current job market.
Now, tech industry itself is broad, and there are IT services part of it. There are products and OEMs who have been differently impacted. Different organizations are impacted by different reasons, and some may have been impacted because they are not making enough profits, or they are making losses, or some may have been impacted because they are tightly integrated to a particular sector where the slowdown has happened and the demand has gone down because of that impact. From an IT services perspective, Gartner has not seen any such concern from recession, and probably during recession also clients are indicating that they will piggyback on the digital transformation more, and they may leverage the capabilities which IT can bring on the table. But having said so, I will not deny this fact that certain industry, for example, chip making industry, may get impacted if there is a slowdown in car sales or 4-wheeler sales.
India's job market is indeed giving mixed signals, but a closer look into several layers that go into determining employment trends within and without the tech and IT sector tells a different story.
A good jump in vehicle sales is as good an indicator of economic turnaround as the thriving job markets. The sales of electric two-wheelers saw an impressive 44% jump in October from the previous month. Ola Electric was the market leader, followed by Okinawa. A look at the sales data suggests that the Indian EV market is witnessing a consolidation now. Our next report offers an insight.
Vehicles with green registration plates are increasingly making their presence felt in the traffic, even without a sound and smoke-emitting silencer. The sale of electric two-wheelers was at an all-time high in October. Over 75,294 electric two-wheelers rolled out of showrooms and hit the Indian roads last month. Electric two-wheeler sales for the September quarter grew by 16% over previous quarter at 162,215 units. The year-on-year growth was a massive 225% compared with the same quarter last year. A McKinsey study projected the demand for electric two-wheelers in India to reach around 8.2 to 9.2 million units by FY30. And after the initial frenzy, the electric two-wheeler market is staring at a consolidation. There are over 80 registered companies in this space. But according to an analysis of Vahan data by Business Standard, just 7 companies accounted for 86% of registrations of electric two-wheelers in September. E-scooters dominate this space. In June 2, the share of top 7 companies in total registrations was 81%. These 7 companies were traditional internal combustion engine two-wheeler players Bajaj Auto and TVS, and electric two-wheeler makers Ola Electric, Hero Electric, Ather Energy, Okinawa and Ampere. These companies are the only ones who recorded 1,000 registrations or more in September. About half of the total registered two-wheeler makers were not able to reach double-digit registrations. According to analysts, these trends will lead to further consolidation in the industry. Not only the new electric entrants, traditional ICE two-wheeler companies like TVS and Bajaj Auto are also making their presence felt in the electric two-wheeler market. In October, TVS Motors sold 8,103 units of TVS iQube Electric as against a meager 395 units a year ago. In September, Bajaj Auto and TVS Motor registered 6,488 electric two-wheelers, accounting for over 12% of the total registrations. Traditional ICE companies have the advantage of a strong dealer and distribution network and can give new EV players a run for their money. Let us hear more from Suhinder Gill.
Yeah, surely, when it becomes a large business, it's an automotive business. It's not only a product that you're selling. An automotive business cannot be a small timers business. So you would see that people who have been not doing national sort of a play and who are not into a complete spectrum of electric two-wheelers, they will have to either work it out again, or they will have to think about some collaborations, joining hands with somebody else, getting consolidated. So in the end, in maybe 2 to 3 years' time, ultimately there will be only less than 10 players who will be leading the pack. It's a very healthy sign because there is enough room for others to act as either suppliers or technology providers like startups. They can do a wonderful job if they have limited resources to be a part or links of a chain of an EV mobility, which is going to really overcome everything else in India as far as two-wheeler mobility is concerned. So there's enough room on charging infrastructure, battery swapping, fast charging, so many ideas of business that are just taking seed. So those are another set of businesses available for people who want to be in electric mobility. But people who want to be national, large players, big volumes, after-sales service network, 1,000 employees, 10,000 crore requirement, those obviously will have to be handled with a very different sense, which means the size matters here. The colossal size matters. As we have seen in case of any automotive operation in India, all the two-wheeler guys, three-wheeler, four-wheelers, they have reached a size which is mammoths, and that's what India needs. So consolidation is good because it would assure a completeness of anything to do with the electric mobility, right from supply chain to end of life of servicing. Not only just sell, make something, sell and forget it.
Gill says it is high time for traditional players to rethink their EV strategy because with 5% conversion from ICE to electric, the writing on the wall is very clear that if the incumbents don't stress on electric, they might lose big volumes. However, there is still time to go before electric fever completely catches up with Indian consumers. For instance, even though electric two-wheeler registrations have hit an all-time high for 2022 at 68,324 vehicles in the festival month of October, which is an increase of 29% over previous month, overall two-wheeler vehicles, which include both ICE and electric, have zoomed over 45% in the same month. Electric two-wheelers account for about 4% in total two-wheeler registrations between January-October. EV companies see 4 to 5% of overall two-wheeler registrations as inflection point, after which faster conversion from ICE to electric vehicles is expected. Analysts are in wait and watch mode to see if the rise of EVs in the last 2 months was driven purely by festival season sale. Experts say the latest October month percentage growth of EV two-wheelers over previous month is in line with every year growth of festive season sales, but the volumes indicate that it is too early to say that it is a beginning of a hockey stick growth. However, with inflection point of conversion at 4% touched months ago, they are cautiously optimistic. The electric two-wheeler sector is still recovering from a spate of fire incidents and is trying to earn the faith of customers. On their part, customers are also treading with caution and choosing brands which are already established. But it doesn't mean that small players don't have enough room to grow in the ecosystem if they realign their strategies.
Moving on, the US midterm elections have historically marked bullish pivot points for the stock market, notwithstanding the outcome. In 17 of the 19 midterms since 1946, stocks performed better in the 6 months following the election than they did in the 6 months leading up to it. Will this time be any different? And will this money chase Indian equities as well? Here's our report.
With the US midterm polls going down to the wire and narrow margins in key races, especially that of the Senate, the Republicans secured pole position in the House of Representatives. Financial markets too were on the edge and keenly awaited the poll outcome. According to Nigel Green, Chief Executive Officer at DeVere Group, reforms to legislation on big tech can be expected to come to a halt in the US due to any gridlock. Pharmaceutical and biotech stocks could also capitalize on a Republican wave as Democrats are pursuing a bill to lower prescription drug prices. Also, energy stocks could be boosted should Republicans take at least one of the chambers. However, a relief rally could be in the offing for investors if historical trends are anything to go by. Since 1950, the average return for the S&P 500 in the 12 months after a midterm election has been 15%, suggests a Bloomberg report with no down years. This time too, Vaibhav Sanghvi of Avendus Capital Public Markets Alternate Strategies believes the outcome of the US presidential polls could spur a rally across markets.
One of the main issues going into the elections, and probably if you see the popularity ratings of the current president, is the management of inflation. Now, going into the election, we've seen an ultra hawkish kind of tone from the Fed. What I would think is basically probably wait for the outcomes, and at the end of it, try to see what is the Fed commentary subsequent to that. So what in our view is basically that Fed will likely pull off from the ultra hawkish tone post the kind of Senate elections, irrespective of whatever the results may be, and try to see how the economy is faring subsequent to that. In that respect, when we talk about the effects on the various global market conditions, from a global perspective, we may see, given the cash levels which are there into the global portfolios, we may see a respite rally probably coming about.
Sanghvi says investors' money could also chase Indian equities.
If the narrative kind of keeps changing from here onwards, saying that we are almost through to the rate hikes and incrementally things may get better, you will see flow of money coming back into the risk assets globally. Now, when we talk about risk assets, emerging markets is one of those kind of risk assets. And we will see dollar index probably kind of taking some amount of respite as well. So in all these scenarios, emerging markets are in a position which may kind of attract inflows.
Technically, Anand James of Geojit Financial Services expects the Nifty to move up to 18,600 over the next few sessions. He says the inability to move above 18,350 after the initial burst could invite long liquidation pressure, but it would require a correction past 18,200 for sizable downside. However, an outright fall is less expected though before testing 18,600 levels. Today, investors will track the outcome of the midterm elections, October inflation, and job data for the US. Back home, the initial public offer of 5-star Business Finance, Archean Chemical Industries, and Keynes Technology India will be on investors' radar. Further, Q2 results of Adani Green, Ashok Leyland, Bata India, Berger Paints, Eicher Motors, Gujarat Gas, and REITs will be tracked.
The US on Tuesday reassured the world that it will stick to its energy transition goals even if Republicans win the midterm polls. The same day, India joined the newly formed Mangrove Alliance for Climate at the ongoing UN Climate Conference in Egypt. What is this alliance and what does it plan to achieve? Our next report answers these questions.
Mangroves are small trees and shrubs which grow along the coastlines. These trees thrive in salty water and form unique forests on the edge of land and the sea. They also grow in swamps. Mangrove forests can survive extreme weather conditions and require low oxygen levels to survive. Sundarbans in West Bengal is the largest mangrove forest in the world. These forests have the ability to store up to 10 times more carbon per hectare than the terrestrial forest, but they cover less than 1% of Earth's surface and act as natural barriers against sea's wrath. They also provide breeding grounds for marine biodiversity, and 80% of global fish populations depend on healthy mangrove ecosystems. They can store carbon up to 400% faster than land-based tropical rainforests. Mangrove's unique ability to capture and store carbon is increasingly catching the attention of the world, which is desperately looking for ways to keep global temperature in check. Spearheaded by the United Arab Emirates in partnership with Indonesia, Mangrove Alliance for Climate was launched at the ongoing COP27 summit in Egypt to scale up the conservation and restoration of the mangrove forest. The alliance will raise awareness about the role of mangroves as a nature-based solution to climate change. India contributes to nearly half of the total mangrove cover in South Asia. According to the Forest Survey Report 2021 released in January, mangroves cover in the country is 4,992 square kilometers, which is 0.15% of the country's total geographical area. Since 2019, the cover has risen by only 17 square kilometers. West Bengal has the highest percentage of mangrove cover in India. It is followed by Gujarat and Andaman and Nicobar Islands. Maharashtra, Odisha, Andhra Pradesh, Tamil Nadu, Goa and Kerala too have mangrove.
I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Sundari tree, which is the most common mangrove species in Sundarban region, goes on to grow as tall as 60 meters. Sundarban is said to have been named after it. Well, that's all we have for you today. But before moving on, our show completes its 300th episode today. And this milestone is the proof of your support, without which we would not have reached here. And we promise to keep you up to date with all the latest news and analysis from the world of business. Thank you so much and keep watching the Business Standard Morning Show. See you tomorrow.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.